The short-term market health of DAX, which consists out of the positive trend, the tranquility, and various sentiment signals, remains very strong since the middle of January, which is such a typical sign for an ongoing wave 3. And as long as this here doesn't turn into the red, Wave 3 is still on. I tell you what's happening at the DAX and the US market. Let's hop into it. While I just talked about wave 3, let's hop straight into our Elliott wave count. This is an H4 chart, JFD indication, and we talked about that symmetrical triangle here shown in red. I mentioned that we still need that third touch to trigger that triangle. That is likely to happen on Monday. That happened on Monday. And we went without faking to either side. We went straight up to hit the first target of that triangle pattern. And then in the afternoon we had a continuous sell into late afternoonish on Tuesday. First of all, that pop here to the upside, it finished wave 3 of wave 3 of wave 3, shown here as wave 5. I'm gonna zoom out here in a little bit to get you a better understanding. And then we went down for a very sharp wave 4, and now the last wave of wave 3 has started. We finished already the first impulse, which is wave 1. We had a nice expanding flat correction. We're also gonna check that at the H1 later on as wave 2 in my opinion, and now wave 3 is about to start of that last impulse. Yeah, let me just zoom out to get you a better understanding where we are. The entire wave 3 started here on August 5th. The first big leg ended at the end of October or middle of October and went for a correction into the end of November, and then the monster started, wave 3 of wave 3 of wave 3. That was the first bigger leg here, and we are looking now for this kind of leg from this point here, which I marked as wave 4, and that wave 3 of wave 3 of wave 3 has finished right here with that green 5. This is the first one, this is the second one, and the last one was the shortest. It wasn't even a clean 5 structure impulse, but it counts as a finish. And now this leg here, that correction, which was wave 2, was comparable to the strong selling action we had from Monday into late Tuesday, which is which likes to be quite the opposite of wave 2. If this one was a bit longer, this one here likes to be sharp in time. And now that part here has to be duplicated from that point here. I must say the high here, the new all-time high, considers or qualifies already as a finish, but it doesn't look like a finish at all to me. We most likely see a duplication of that leg here. If we just measure that to make it very simple, drag that over here, you see we still have much more room into the 24,000 area. And after we finish that leg, we are seeing a larger correction as wave 4, which is comparable to that one here. And this one was quite long in time and was very shallow with lots of ups and downs, and I assume that wave 4 is going to be much sharper in time and in price. And this is the same count on the daily basis, by the way, if you want to have more insights about the DAX, the US market. Timing tools, we use subcycles to determine different time bands to create buying opportunities even on the short term. time bands if you want to get indicator insights, so you get a better understanding what's actually happening behind the scenes. You're welcome to join or sign up at JCS-Charting.com. You can buy 2 packages there. Everything is explained on the website. Let's have a look at this chart here. As I said, it's a daily chart. The general big count here of wave 3 is here 1. Here's that second wave. That was that channel in the previous chart, and that big wave 3 of wave 3 is about, or should find an end somewhere here in the green box between 24,030 and 24,581 before we start into wave 4, which I assume, since this one here was very shallow and it expanded in time, I expect this one here to be steep in price and in time before the next leg to the upside starts. And this, for instance, is our subcycle chart. It's a zoom in of it. It's an H4 chart based on the setter indication. And here we determine the cycle starts here marked with these yellow circles. The red line marks the cycle start. So this line needs to hold, and this is what happened here last Tuesday. Actually, that was the low from Friday. We rallied up all the way to that all-time high, and then we sold off. We made kind of a double bottom. We didn't confirm to break that low, so that subcycle stayed on. It confused me a bit because I thought there's a possibility that we're going to break that subcycle start right here, which would mean we get selling pressure into the next day, but that didn't happen. We went all the way up to a new all-time high, and then right on time we were actually marking a new subcycle low on Friday afternoon. And this one here qualifies already as a new subcycle low because we rallied already between 200 to 300 points, which are the min requirements. We left already a gap down at 23,008. That was a close on Friday. I'm saying that because the after hour session ran already into 23,220. So I assume that gap up on Monday. And in my opinion, this here was already the start of wave 3 of that last wave, which started right here on the 4th of March. Note there are still open targets of that green sequence. 28,584 hasn't been hit. The 23,476 got hit very, very precisely on the dot. There you see once again how precise these sequences actually work. 23,816 is the last target of that sequence. On Friday, I came up with that expanding flat correction for my members when we were right here. Down here, I explained the expanding flat theory, how it works. You usually have an ABC as leg A to the downside, then you have an ABC up as leg B to the upside, which under or overshoots the starting point of that leg A, and then we have usually an impulse down, or it can be also an ABC as leg C to the downside, which overshoots the end of leg A. And the leg C is supposed to be a minimum 100% of that leg, and it may extend up to 161.8%. There are exceptions that it may go down to 200%, but as I said, these are just for exceptional cases only. And this is what happened. We had here leg A, leg B, that was that all-time high with that overshoot, and then we have an A, B, C down as leg C, and we were hitting exactly the 161.8 extension of leg A here on Friday afternoon before DAX started its journey to the upside again. That here was a nice combination in price and in time. It was a 161% of our expansion level, and it also was our suggested timing for a subcycle low on Friday. And since I checked various time frames, for instance, this one here is the M30, the 30-minute time frame with the JFD indication, I came right on time, right when we were down here. I came up with that bullish Wilbur wave wedge here shown in blue, and that hit already the first min target line in the after hours session, and I assume we're gonna hit actually the original target line of that wedge here on Monday as well. And before I start off with the US market, let's have a look at the smart money flow index of the S&P 500. This data is provided by wallstreetkorea.com, and this information is usually for members only. And yeah, what was interesting here, and I was tweeting that a lot on X as well, that sell from Monday into Tuesday, that is actually the point when big guys stepped in. You see it clearly here, down here, that the increase of smart money, especially in the late session, was picking up a lot. And then you get a so-called divergence. You made lower lows at the index, while smart money made higher lows and actually went already higher. That means big guys were buying these lows, if you want to believe it or not, and that will cause at least an intermediate rally at the indexes. And we start off with the Dow Jones, and we start off with the Dow Theory, which compares the industrials with the transportations. The transportations are at the bottom, and the industrials here are shown at the top. And we have already two divergences which are positive. The one here in blue, which is the big one, which compares the low from January, or this one here is the low from December, to the recent lows we just made in March. And as you can see, the transportations made already a lower low. It was breaking the lows out of December and out of January already here at the beginning on Monday, while the industrial stayed above those. And there's a smaller divergence, which is interesting because the industrials made a lower low on Friday, while the transportations actually kept making higher lows the entire week. And that is actually another positive divergence, and it is on the intermediate term a buying signal for both. And we stay with the industrials. This is a H4 chart, JFD indication again, and we talked about that M top here. We talked about hitting that first target here already on my last update. The Dow hit now the 100% target, so that pattern here, that M-top pattern, finished. And what is actually more interesting or more important is that red sequence here, which triggered at 43,000 roughly, and it went all the way down to the min target of this is the first min target, this is the second min target at 42,240, and the red 138, it likes to be turning point, and this is what happened. It turned around right at that level here on Friday. And I also must say the Dow Jones is different to the Nasdaq and the S&P because it is the only one which hasn't undershot that low we made in mid-January. We just talked about that in the Dow theory. So as long as the Dow actually stays above it, that primary cycle, that is also a primary cycle start, is still positive. And if that remains positive, the Dow is on a total different page than the S&P 500 and also the Nasdaq. And this is the last Dow Jones chart. It's a daily chart, the cash indication, and this one is also interesting. First of all, it has different levels than the JFD. We also had a red sequence here, which hit that min target here at 42,428, and then it turned around. But that turning point, which occurred on Friday, is actually quite interesting because it was a perfect hit of the 88.6% of that rally. And for some reason, the Dow Jones likes or really loves that retracement level of 88.6. It also matches 38.2 again of, let me just zoom out here a little bit so you get a better understanding of that rally, which started right here in April of last year. You also see here these cycles, and we are a bit on the early side. There's still the possibility that we finish that red sequence, which corresponds to that red dashed line. If that happens, it's going to be another great buying opportunity, in my opinion. Yeah, this is a Nasdaq, also a daily chart, the cash indication, and to get you a better understanding here, this is the start of that primary cycle, which started on the 13th of January. We went around here for a couple of weeks to make a new all-time high, but it was more or less a left-hand translation. We were making a new all-time high, but then we are just after 2 days staying slightly above these highs. From December, Nasdaq turned around completely. It broke that trend line, it reconfirmed that trend line, and it went all the way down to that start of that primary cycle. Now, what else happened? We have a suggested cycle low here on the 7th. That was Friday, and it bounced off very strongly. And the other thing, what happened the previous day, we had daily close below that 100% trigger at 2132. That means that sequence actually triggered for lower. That means this here is our min target area. This is a bonus. But most of the time, whenever these sequences trigger, there's a bounce initially before it actually happens to hit these min targets. So I assume a bounce here as the start of that cycle, and then we most likely actually run lower to hit these lower targets at Nasdaq. And we have a quick look at the hourly chart, JFD indication of the Nasdaq, and on Friday I came up with that sequence. That sequence triggered here already on Thursday because we had an hourly close below the 100% at 20.022. Then it oscillated there, initially bounced, and then it came down, and then in the afternoon on Friday, it actually went all the way down. Once again, we were hitting our min target zone. 1977 likes to be a turning point. I gave my members that hint to buy either here, 19,770 or 19,614. And then in the afternoon or in the evening, it went all the way up. I came somewhere up here with that magnet level 2234. This is a trigger of that green sequence to run higher again, but Nasdaq still needs an hourly close above that level. And here you see once again how these levels actually work. We had a nice hit and a nice rejection there. That means Nasdaq knows about these levels we use. Yeah, this is the S&P 500 daily chart, also cash indication, and I came up last weekend, and I also was posting that on X with that rising channel here. It had several touches here on the upper side, but it wasn't a confirmed channel yet because there was only one touch here on that lower part. It looked quite good on Tuesday. Just above it we turned around and went for that initial bounce, but then on Thursday we lost it. We lost also that trend line, which isn't a trend line yet. But the S&P actually managed to get back above that channel boundary. However, similar to Nasdaq, we were triggering a red sequence here below 5760 on Thursday as well. That opens min targets between 5612 and 5655. There's also something interesting that the Nasdaq went already much lower, that gap here from the 18th of September last year. It's still open at the Nasdaq. It matches that 5612 very nicely. And as I said many times before, that likes to be turning point at the S&P 500 as well. What's interesting to note is once you connect here these lows with each other, we actually were hitting that and were reversing from there. It's not a broadening top pattern in my opinion, because if you want to draw a broadening top, you need to start, as it says, you need to start from the top, and that would be that all-time high here on the 6th of December. So this would be the first point, this is the second, the third is right here at that all-time high from the 19th. And then you need the fourth touch, which is on the downside. It could be this one, but it could be even lower next week or the week after. And then we need the third touch here on that upper trend line. And then that broadening top pattern is actually triggered. To explain you that here more in detail. The last one I got for today is gold, H4 chart, still the JFD indication. That is my projection, which worked out almost perfectly. We were shorting a gold right here and went all the way for these 100 points to the downside. We were triggering at 2846 for lower, and I'm pretty sure we still see at least 2816 to 2804, even lower, to correct that whole primary cycle at gold. That bounce here, we took also our profits. We made another, I think, almost 100 points at gold, and now we were shorting actually the 2925. Be careful if we get back above 2941 or 2950, let's say, then gold is on a different page. I still assume we run into that next cycle into mid-March for these known targets, and then a new primary cycle might start out of there for new highs. Yes, that's it again. If you like that update, you're welcome to leave me a nice comment or give me a thumb up. I see my members tomorrow at the blog, and I wish you a happy remaining Sunday. Take care and be careful out there. March likes to be volatile. Thank you.